They just had a huge explosion in a case called the Panama Papers. A major law firm, Mossack Fonseca, based in Panama, had 11.5 million files stolen, given to a team of reporters, hundreds of them, 80 countries, speaking 25 languages, who poured over them and disclosed several hundred thousand of the world's wealthiest people who hide behind nominee companies called shell companies or nominee directors and officers called straw people in places like the British Virgin Islands where they listed over 100,000 companies. Now, why do they do this? They do it simply to hide their money. So if you don't pay tax, you stick it in a company, you go buy real estate in London, what have you done? You've committed tax evasion, you've committed money laundering, and either wire and or mail fraud. You're looking at years in jail. Hundreds of thousands of people from one law firm. That doesn't include the multinational banks, UBS, Credit Suisse, all of whom have already pled guilty to felony pleas. And many are still under investigation. The spread is now looking to Israel, Singapore, the Caribbean. Every US person who is not disclosed their foreign accounts, reported their earnings, now face criminal prosecution if they're caught. What you want to do is clean it up immediately. If you file an amended return, that's an admission, evidence that your original return was perjured, you lied. Everything you put in the amended return can ultimately be used against you. How do you use it to your advantage? You make the amended return your case in chief, and you explain the following. Here's the tax that's due. Here are all the forms that are due. The Form 114 for the FBAR filings, the Form 8938 for the FATCA filings, the tax return with the correct amounts, the tax return with the correct information statements. You request a waiver of penalties based on reasonable cause. Now, reasonable cause is tough if you don't have it. You can't lie your way out of it. You have to tell them the truth. But if you have a good faith belief that what you were doing was legal, there's a 1991 case called U.S. versus Cheeks. The Supreme Court has stated that a good faith belief is all that you need to exonerate yourself from scienter, willfulness, the intent to commit criminal tax evasion. The key to the case is you have to have been misled or not been a tax professional. So for example, if an advisor said to you, my funds were offshore, just like U.S. multinational corporations, until you repatriate them, there's no tax due and no reporting, perhaps it was reasonable to rely on it if you're not an expert. It's not true, because individuals don't have the same rules. If you have a controlled foreign corporation, which is 5 or fewer people, you are taxed annually on the net income and it has to be reported. But the question isn't whether or not it's true. The question is, did you believe it was true? So, was your belief in good faith? You can't be guilty of willful blindness. You're not the Three Stooges. I can't see, I can't see, I can't see. Why? Because my eyes are closed. Now, if you legitimately didn't understand and were misled, that's a very good reason. There are other reasons, but reliance on an advisor, reliance on tax professionals, being unfamiliar with the law and misinterpreting it, being a do-it-yourselfer, all good reasons. Then you list that under your good faith request for waiver of penalties with what's called a protective election describing it, and then you have your tax opinion because you got to get ready to be audited. Now, if this works, you will not have scienter, so there's no criminal prosecution. You will not have civil tax fraud, so there's no civil FBAR penalty of 50% of the account balance or a 75% fraud penalty for understatement of tax. That is important. Saying you forgot, saying you blame it on everybody but weren't misled isn't going to work. It is the moment you get religion. You make a decision on how you want to proceed, and once you do, there's no turning back. You make the decision to straighten up and fly right, like I alluded to at the beginning. Pay your tax, file your returns, have a very good reason that you didn't do it, and hire an expert. For all you do-it-yourselfers, the equivalent is you go about and buy a new boat and it's beautiful. But as anybody that sails boats will tell you, it is not the seaworthiness of the boat, but the skillful navigation that assures the prosperous voyage. So if you don't want to go to jail, don't cheat on your taxes. And if you have, don't lie to yourself. Clean it up before the knock on the door comes. The real problem with this is people think they have unlimited, indefinite time to clean this up. You don't. You have a window. The analogy is life insurance. If you die and you don't have it, it's too late to get it. If you haven't cleaned up your taxes by the time the IRS Criminal Investigation Division knocks on your door, it's too late. Now, you're under a full-fledged criminal inquiry, which between fees, pressure, time, and reputational risk is a no-win scenario ever. Plus, my guess is many of you are not interested in financing lawyers. You will create a feeding frenzy for tax lawyers and criminal lawyers.